Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hey everyone, looking in on SPY, IWM, and QQQ. So as of right now, the consolidation ongoing in the S&P 500 is exactly what the bulls want to see. After that big move to the upside, no surprise to see consolidation, but the bulls bought the dip on Friday, and the bear volume was very minimal. We did see a lot of volume come in at the end of the day there, but a lot of that volume towards the second half of the day was for the bulls. So the bulls are very pleased with the consolidation currently going on. We haven't even filled the gap yet, 236.95. If we see follow through on Monday and another green day, that's just going to show extreme strength. And we could be viewing this as a bull flag of consolidation on the S&P 500. Without that gap, we do have that gap, but it is a big move to the upside and now normal, healthy, contained consolidation, and we're just looking for that continuation. So the gap to fill at 236.95 will still be a target if we see weakness. We're going to be watching the 100-hour moving average support. We have held that level twice the past 6 days, I believe it is now, and we didn't test that level on Friday. We came fairly close, but that 100-hour moving average support is going to be a key level I'm watching, and that's going to be above this gap fill on Monday. And resistance, we've got 238.61 and 239.57 for the bulls to get over to see that strong continuation. The weekly time frame, we have the first upper wick that we've seen in the past 6 weeks. So that is worth noting. We see profit taking here by the end of the week, and we didn't see that on any of these candlesticks on the way up. So we do need to be a bit cautious on the weekly time frame, but as of right now, the daily time frame with some more detail is really nothing to worry about for these bulls. If we were to see a spike in bear volume and another close near the low, that would obviously change things, but again, as of right now, bulls are very pleased with consolidation. IWM is holding the middle Bollinger Band for a third test in a row, 138.28. That's a key level going forward. And just another example where IWM keeps showing us that it is the weakest of the three, and we keep getting examples. So if you're looking to play SPY to the downside, in the recent past, playing IWM to the downside will return bigger gains. So how can we tell that? Well, let's look at the low of February 28th. That was down at 137.76. We bounced off 137.88. So just 12 cents or so above the low of February 28th, and let's compare that to the S&P 500. Low of February 28th was down at 236.01, and we got multiple dollars here above that level. So nowhere near the low of February 28th. Look at QQQ. Low of February 28th, 129.66. Not really anywhere near that level, but IWM came right up to it. So that just shows you the weakness compared to the other names, but the bulls did buy the dip, and we'll be looking to see if they can maintain this middle Bollinger Band. It is still ascending rapidly, so the bulls are going to have to pick it up here and turn things around back towards the upside to keep maintaining this support level next week. Resistance is 137.88 and 140.36, and we'll have to update that level, the middle Bollinger Band, each morning as we play out. So we still have this upper Bollinger Band, or I should say the upper wick, on the weekly time frame here for IWM, similar to SPY, but more bearish. And that shows a lot of profit taking. If we were to lose these exponential moving average supports, this 8-period exponential has held for the past 3+ months. It's going to be around 137.50 this coming week. If we close below that level, we will be looking down to the middle Bollinger Band on the weekly as the next support level to be watching in the longer term trend. So the bulls do want to maintain that 8-period, and we need to see them maintain the daily middle Bollinger Band in order to have some strength to start next week. Red flag for the short-term bulls if this middle Bollinger Band is lost. QQQ, similar to action to the S&P 500. with very normal healthy consolidation. We had a gap at 130.45 and we did fill that gap on QQQ, and then we closed up near the high of the day. So resistance is going to be 131.06, 131.43, and then 131.68 is the all-time high. We're just 66 cents below the all-time high, which ends up being roughly about 0.5 to 0.6% from where we currently stand. So the bulls are still very strong. We have a new higher low of support. Previously, we were looking at the low of last Friday as support of 129.38. Now we're looking at the low of this Friday as support, 130.34. Higher lows continuing, and we'll see if we can continue to higher highs. Little bit of an upper wick on the day on the weekly time frame. Nothing too concerning for the bulls, and we are negating that bearish reversal doji from last week and continuing this extremely strong move to the upside. So we are going to be cautious, because one thing that we would be aware of, if we do see the bulls head back to the upside to start this week and they can't get new all-time highs and higher highs, and then we head back down towards the low of this past Friday, that would be a heads up, because we could potentially form a lower high and then a lower low. So we will be keeping an eye out for that scenario, but as of right now, the bulls got some nice momentum to end the week heading into next week, and we'll see if that follows through to the upside. I appreciate you watching. We'll check back in on Monday. Have a great weekend.